Did you know that every time the bank gives you a loan, they're not lending you their money? They're creating money out of thin air, okay? So essentially, let's talk about the fractional reserve banking. Let's talk about loans and essentially what it can mean for you. All right, now before we dive into that, thank you guys for watching this video. If you're brand new, go ahead and leave a like. If you leave a like, it will definitely help the algorithm, and information like this can get out much more. Okay, and it'll motivate me to continue to make more content. And also at the same time, man, if you like the video, subscribe. All right, so you can get notifications and be able to see content like this on a regular basis. All right, so thank you guys for that. Now, the purpose of this video, man, is essentially just to uncover the fractional reserve banking and how you can leverage this system to get no doc loans and to build your financial future. Okay, so number one, what is fractional reserve banking? Okay, fractional reserve banking is a system where banks are required to keep a small fraction of their deposits in reserve, while the rest can be loaned out. This means the banks can lend out much more money than they actually have. Okay, so taking a look at that and understanding that aspect, all right, if a bank has 1 million in deposits, the reserve requirement is 10%. They only need to keep 100,000 in reserve, but they can lend out $900,000. So if you apply for a $100,000 loan, the bank is really going and pulling out $1 million, okay? Because all they have to do is give you 100,000, okay? And essentially they take that 900,000 and loan it out to other people. But that's not really the case. They're still pulling out these applications. They're still exchanging your application and getting $1 million every single time you apply for $100,000, okay? So essentially how it creates loans, all right? Loans are created under this fractional reserve system because banks lend out deposits. They don't lend out deposits directly. They create new money through loan agreements. So they keep the money. So people are trying to figure out, well, damn, when we talk about them double dipping, when you apply for something, they already get the money. Get what I'm saying? And the way they're able to get more money is by continuing to create more loan agreements. All right? So when you take out a loan, the banks creates the money digitally and adds it to your account. So when you look at your account, it is essentially just numbers. If you think about it, the banks never give you cash in hand. And when we're talking about consumer credit, they have to give you cash in hand, all right? This is why the system is often referred to as a money creation through credit. Money is created because of you, all right? If we don't put in applications, the banks don't make money. Banks can't create money. They never did create money. When you put in an application, they just put in some dollar amounts in your account and they really keep all the money, okay? And then after that, they come after you for the money, which is crazy. So this is how the economy is fueled, on loan agreements, on the public putting in loan applications. Banks literally depend on us borrowers to create money and drive the economic growth. So when you look at the FCRA, they really explain this. If I pull this up, give me 1 second. 15 USC 1681. Boom, boom, boom. Let me go ahead and drop this down. Okay. So 15 USC 1681, congressional findings and the statement of purpose. So what is the congressional findings? That means that Congress has found something, okay, and they wanted to state the purpose of it, okay, of their findings, okay. Now, accuracy and fairness of credit reporting. I was talking to one of my clients today. The Congress makes these following findings. Now, this is under the FCRA, the Fair Credit Reporting Act. And essentially, I'm going to make this connection with credit repair. I'll make this connection with funding, and I'll make this connection as to why they depend on us. All right, so Congress made these following findings. The very first statement: the banking system is dependent upon fair and accurate credit reporting. Inaccurate credit reports directly impair the efficiency of the banking system, and unfair credit reporting methods undermine the public confidence, which is essential to the continued functioning of the banking system. Okay? An elaborate mechanism has been developed for investigating and evaluating the creditworthiness, credit standing, credit capacity, character, and general reputation of consumers. consumer reporting agencies have assumed a vital role in assembling and evaluating consumer credit and other information on consumers. There's a need to ensure that consumer reporting agencies exercise their grave responsibilities with fairness, impartiality, and respect to consumers' right to privacy. So everything is really right here. Let's start here, or really unpack this part. This is primarily, this section is primarily about credit bureaus, but I want to make it make sense as to why, credit bureaus really play a hand in affecting the economy, okay? So the banking system, right off the bat, this is what Congress has found, that the banking system is dependent upon fair and accurate credit reporting. Why? Because if it is not fair, it can impair the efficiency of the banking system. What is the banking system dependent on? The public confidence. So if credit reports do not report fairly and accurately, we would not believe in banks. We would not put in loan agreements. You dig me? So with that fact right there, we'll come back to that later. Understanding that, this is what Congress has found, that essentially they have affected the public confidence. If Congress has found out that the United States or that the banks need us in order to participate in commerce, this is why it's important for them to at least take the public serious. This is just a fact to let you guys know that the banks can't move without us. Okay? So back to what Modern Money Mechanics says, which talks about the fractional reserve. And I may do a separate video on Modern Money Mechanics. I'm really just talking a little bit about some of the concepts in Modern Money Mechanics. But I just want to make it plain and simple so that you guys can understand how we're going to use this to our benefit. Okay? So essentially, why this system benefits borrowers, okay, is because fractional banking makes, credit available. You feel me? So if there's more loans, that means there's more opportunities for banks and for businesses and for individuals to grow. But also at the same time, banks are incentivized to lend because it creates a profit for them. So when we say, the banks are required by law to loan this money, well, they need to loan the money. You dig me? See, the people that truly benefit from this information are the people who know it. And I said this in my last video. Now, there is a low barrier of entry when it comes to getting no-doc loans. All right? You don't need tax returns. You don't need, bank statements and things of that nature. It says that the system is why banks are willing to provide funding with minimal documentation. You just need to know how to position yourself as a low-risk borrower. So how do you position yourself as a low-risk borrower? By having good credit, okay? Understanding the FCRA, understanding how to make your credit report, look good so that you look like a low-risk borrower. We can say, well, they're required by law to do it, but, in a trust model, they can essentially play the game of acting as a trustee and say, well, I don't think you're ready for the money because of you being in debt, okay? Or you not being able to pay your loans back or not paying on time, things in that nature. So if you move with that fact, then you'll be able to get as much credit as you need. Because some of us have good credit. If you have above a 680, 700 credit score and you haven't gotten funded, it's because you don't know you can. You probably think you need all these documents, this, that, and the third in order to get funding, but you don't. All you need is a 680 credit score or better, an LLC, and the EIN. And even now, they're coming with some new UCC laws that you don't even need your SSN. But if you use yourself as collateral, you can be able to get as much funding as you want. Just be smart with your money. Just be smart with the funding that you get. Now, here's the risk of fractional reserve banking. Overlending can lead to economic instability and a financial crisis. We look at the 2008 recession. This is why we went in a recession, because they was overly lending. It created inflation, and because of that, we went into a recession. Okay, housing prices went up because a lot of people was getting loans. So essentially, in order to prevent that, they try to control the loans that people get. It creates high levels of debt for people. And if you don't know how to navigate debt, anybody who has tapped into my content, you know how to validate debt, You know how to negotiate debt, but you have to be very strong and confident in these concepts if you're planning to go a route of building business credit and try to discharge it. I don't ever recommend anybody to get credit to discharge debt, okay? So it's all of a law of attraction thing. If in your head, I'm going to get credit and I'm going to just discharge it, you're probably not going to get the funding that you want or deserve, okay? You have to attract it. But when you understand the system, you can pretty much use it to your advantage. Now, this is how to leverage the fractional reserve banking system for your benefit, okay? You want to build a strong credit profile, okay? How are you going to build a strong credit profile? This is what your credit profile should look like. Let's go on Google. Good credit profile. See if I can find. Okay. There's nothing on here on Google. So a good credit profile, let's see. Okay. Wasn't able to find what I was looking for, but a good credit profile looks like this. You have, in order to have a 680 or better, you have to have no late payments, all right? Low utilization, under 15 to 10%, optimals 10%. You want to have no derogatories, no collections, no charge-offs, no negative items, okay? You want to have at least 2 years of history or better, and maybe some trade lines or some primary lines of credit that is minimum 2,500 or more. The more and the better these statistics look, the more funding you could get. You could have a 600 credit score, but if you meet those requirements and you have an EIN and an LLC, you can get the same amount of funding as somebody who has a 700 credit score and has those requirements, okay? So that's a strong credit profile. If you have a strong credit profile, then you can access these loans very easily. Easy and being able to access them is two different things. Yes, you can access this stuff with bad credit, but you have to know the law and you have to know how to communicate. You have to understand how to build relationships with the banks. You have to know which banks to go to. That's not going to give you a hard time. You could say, well, this is duly mine, right? 12 USC 1431 says that, it is my right to get credit. It is my right or the Truth in Lending Act. It is my right to actually get credit since I'm a creditor, right? You can say that you as a bank are required by law according to 12 USC 1431. You can say these things, right? But if you don't know how to communicate them properly, or if you're not using it in the right context, then no, they're not going to give you funding just because you sent them a letter, this, that, and the third. Okay? And then we talk about 12 USC 347B. And essentially, this talks about liquidating your credit cards and liquidating their money and things of that nature. All right? But you use these laws not to fight your case. But anytime they say, you use this to challenge them. Anytime they say, well, we loaned you the money. Well, you say, well, in 12 USC 1431, it doesn't say you guys loan any money. So this is probably better in connection with debt and things of that nature, using that against that. But I want you guys to use this law to empower you to actually get funding that you want. But take making a credit profile very serious. Now, after you get the funding, because a lot of people get the funding and they just want to have the funding, use it to your advantage, all right? Invest strategically. Invest into things that will make you more money. Don't get funding just to say I got funding, because some stuff have terms on it already that you have to pay back. Some of us think that we're going to get funding and we're just going to be able to discharge it. It's possible, but only for the select few that understand how to do it. Not someone who just watches a video and thinks they're going to be able to get it. Not someone who just watches a couple videos and have an idea and think that all I have to do is do this. You can know exactly how to, you can have every single template, every single page in the book on how to be able to discharge debt. But if you don't actually understand it, you don't actually believe it, you don't actually know how to exercise it, it doesn't matter if you have every single piece of documentation that can get your debt discharged. If you don't know how to fight it in court, if you don't have the confidence to do that, then you're not going to get your debt discharged. Okay? So essentially, that's why I created my No Doc Guide. My No Doc Guide is going to help you understand what is the proper credit profile to get business funding. without any documents on both fronts, from using your personal credit and on the other front of not using your personal credit. Now, I'm not going to be the one to tell you that you can get funding without good credit. Okay? If you have good credit, this is when you want to go apply. But if you don't have good credit, look at what is keeping you from getting funding and get that stuff removed. Because whatever kept you from getting funding, you're going to take those same habits into creating a business bank account. Into getting the business funding. Because if you mess up your business funding, you're actually messing up your business. So don't do that. Okay? Make sure you're investing strategically. Make sure when you do get the No Doc guide for only $17, you learn how to get the funding, and a lot of you guys are going to be able to take this, get over $100,000, $250K, more and more, maybe even just a simple $50K. Make sure you're using it strategically. Make sure you're investing in yourself properly. You're not investing into something that is a magic potion. You're investing in something you actually know about, and you know that the money will come back from you investing that money. Okay? This knowledge will empower you, because knowing this fact will let you understand that, damn, there is money out there for me. Okay? I can pretty much go out there and apply, and yes, the banks are getting millions of dollars, but dang, I can get $100,000. If they're getting millions from me putting in a $100,000 application, then I should be able to get something from it. And you can hold them to the task. For my people that do know how to communicate with debt collectors and do the administrative process, if you know this fact and you get denied, you can use this against them. Hey, where did you get your source of funds? And because you know where they got it from, they cannot just straight up lie to you and say, we never got $1 million from your name. Okay? So if they ever say, oh, something, you owe us and this, that, and the third, you can use some of this information against them. Okay? It's important to understand how these banks operate and what motivates them to lend. Okay? They want to eventually lend to people that's going to help them make more money. Okay? They want to lend to people who they know will come back and get more credit, will come back and get more funding, not somebody who's just going to get one funding and boom, they're going to squander that and never be able to come back. Okay? Now, if you're a person that know how to fix their own credit, know how to remove that information off your credit report, by all means, do what you got to do. But if you don't know how to do that, this is what I'm telling you. So you don't have to go and get a credit repair specialist, this, that, and the third, and wait all this time. Make sure when you get your funding, you are being very responsible with it, and you are just taking advantage of it in a proper way, investing in things that you know is going to make you money. Okay? And essentially, if you do understand this, it will allow you to make more informed decisions and get away from the predatory practices of banks. Okay? If you know your predator, you'll know how to be able to maneuver. Okay? That's the key. Knowing who you're getting or doing business with, who you're laying in bed with. Okay? So essentially, man, if you're ready to take action, I know this video, straight to the point. But if you're ready to take action, my No Doc guide, it's only 60 slots left. Okay? And it's only $17. Okay? Some people will say, well, I want to get $100,000, $250,000, but won't spend $17 on a No Doc guide that's going to explain to them exactly how to get it. If you want to get to 100K in funding, 250K in funding, check out the No Doc guide. It's only $17. Okay. It costs less than a meal on Uber Eats. Okay. Somebody probably ordered Uber Eats today, but didn't invest in themselves and get the No Doc guide. Okay. So tap in, because this information could probably put you in a different position in the next 90 days. Okay. So once again, thank you guys for tapping into this video. If you have any questions, drop them down below in the comment section. Or if you want to compound and have more of a conversation about this, if there's any other topics you want me to talk about in regards to funding, debt, credit, starting a new business, drop it down in the comment section. If you're brand new, go ahead and hit the subscription button so that you can get more notifications. But other than that, thank you guys for tapping in once again. I love you guys, and I'm out. Ah.